So hello and welcome. Our recording is starting right now. So welcome to the webinar. We are here in London at the Portuguese Chamber of Commerce here in the UK. It's Thursday, the 2nd of March, 11 a.m. And my name is Christina Hippisley. Many of you will know me already. And I'm the General Manager of the Portuguese Chamber of Commerce. And today we are doing the first of our 2023 webinars where we look at the investment landscape in Portugal. So today is an introduction to Portugal's investment landscape, and our speakers are our chamber members, Bison Bank and ActiveCap Capital Partners. Now, just for your information, everybody, I can see we've got lots of participants watching me. This webinar will take around 30 minutes, and we'll take questions at the end from the audience. We've also already had some great questions from you, so thank you very much for that. So we'll be answering some of those as well. If you do have any questions, please put them in the Q&A box or the chat box if you prefer. And just to reiterate that the presentations from Pedro and Nuno, from our two members, Bison Bank and ActiveCap, will be sent to you at the end of the presentation shortly afterwards. So everything will arrive in your inbox, don't worry. Okay, so back to an introduction to Portugal's investment landscape. Here we go. We have two speakers with us today. Now, what are we going to cover today? I'm sure many of our listeners are wondering what we're going to be talking about in detail. Now, first, in this 30-minute webinar, we're going to ask Nuno da Rocha Correia, who's the MD of Bison Bank, one of Portugal's top boutique banks. We're going to ask Nuno to talk us through Portugal's current rates of growth and also to give us some background on the massive influx of EU recovery funds that Portugal will shortly receive, which will be pushing up public investment to historical levels. There's no question about it. So after we've heard from Nuno, then we're going to hear from Pedro Correia de Silva, no relation, but Correia is quite a common surname in Portugal. And Pedro runs ActiveCap. Now, ActiveCap is one of Portugal's top private equity fund management companies. And actually, ActiveCap was recently ranked #1 by Portugal State Development Bank, which is a big vote of confidence. Now, Pedro is going to talk us through the reasons why investing in Portuguese SMEs, small and medium-sized companies, offers above average returns. And he will also give us some examples of recent companies. So first of all, let me introduce our first speaker. Now, our first speaker is the Managing Director of Bison Bank, SEA. Now, Nuno da Rocha Correia, as you can see here on the screen, has 30 years of experience in capital markets and wealth management. Currently, he's the Managing Director responsible for the Clients Management Department at Bison Bank. And he's also, we learned yesterday, a non-executive city councillor at the municipality of Lisbon. So congratulations on that, Nuno. That must be a very interesting outside the office job for you. Now, Bison Bank, more importantly, is a European bank. It's based in Lisbon, but it has more than 20 years of a track record in business. It provides wealth management services and also depository and custody and investment banking services for institutional clients. And they have a particular emphasis on cross-border work, linking European markets with global markets. Now, Nuno, you and I discussed this in some detail yesterday, but the information you're going to be giving the audience is particularly interesting. Perhaps you could now talk us through why you see the future for Portugal being so bright in the next 3 or 4 years.
Thank you very much, Christina. It's a huge pleasure to be here with you and with all this audience. Welcome to this webinar. Welcome to Portugal. A word of thank you to the Chamber of Commerce, Portuguese Chamber of Commerce, for the great job that have been doing in the last years, promoting Portugal, promoting the investment in Portugal. We are an open country with open arms to welcome all of you, and you are very welcome here in Portugal. So thank you very much for being today here with us. I will not take too much of your time. I will go through a couple of slides that I prepared here to talk a little bit about the shape, like Christina was saying, the shape of the Portuguese economy. And we can say that the Portuguese economy is in a good shape. And it's in a good shape if we look at this first slide. We just had the numbers from GDP this week, and the Portuguese economy grew by 6.7% in 2022, which is amazing after the COVID situation. Also, as you know, the Portuguese economy is a very open economy, dependent on our European partners like Spain, France, Germany, and UK. And we managed to grow better, to do better than European Union and better than other European countries that are on the same path as we are. So in terms of the economy, a good sign from last year and a good start of this year, where we have a very important thing happening right now that Christina also mentioned, that is the huge check that European Union is giving to Portugal in the coming years. Already has been sending a couple of billions to Portugal, and this recovery fund will be invested in the Portuguese economies, in Portuguese companies, some of them that will be on the radar of Pedro Correia da Silva, that will explain later how they are going to invest in these companies. But the European Union, it's putting a big check in Portugal to invest in this resilience program, in the climate change transition, and in the digital transition. So this is very, very important, not only for now, but for the decade. So for the next 10 years, we will see the outcome of this investment, which represents 3% of the global GDP, and that is quite important for the Portuguese economy. We must not forget that Portugal, it's a tourism country. It's a country where the tourism and all the activities related to tourism represents a huge part of this growth. And what we have seen last year and what we are seeing this year in terms of the hotel reservations and all the slots at the airports that we have been hearing on the news is that we are having a great tourism year in 2023. We already had a very good year in 2022 at the level of 19 pre-COVID, but 2023, for sure, it will surpass those levels. And that is very, very important for many sectors, not only tourism, real estate, leisure, well, many sectors that depend on this, and we will see good things coming from this inflow of people coming to Portugal. Many of these tourism, and we are very grateful for that, many of these tourists choose Portugal for the second home. So a word of thank you for that, for all of you that have done that choice of having Portugal as your second home. You started by coming to Portugal just to play golf or to come to the beach or to have a very nice meal, a good wine. And now you have a home here in Portugal. So that's very important for us. And we are very grateful for that. Moving to the next slide that I would like to share with you. Just 1 second. Yes. Of course, we all have challenges. This is not only the sun is shining today, also here in Lisbon, it's a great day, but also there are some clouds. There are some clouds that we have been facing, not only Portugal, but European countries. Well, the world has been facing. The inflation cloud. So the inflation is now peaking this first half of the year. We think that it's reaching the peak in this first half of the year. It's an inflation that comes from the expansion of the profit margins of the companies, not if we compare energy prices today to energy prices a year ago, they are lower. So if we compare durable goods today with durable goods last year or 2 years ago, they are lower. So this is an inflation that came from the expansion of profit margins from the companies. And we think that this inflation will come down in the next months. And if that happens, we will foresee that interest rates in the future, in the second half, in the 2024, will start coming down also. Now, as you all know, and that's on the agenda, in the Portuguese agenda, there was this declaration from the Prime Minister of Portugal concerning the Golden Visa. I just brought here our political system, just for you to be aware that one thing is the announcement of the Prime Minister, another thing is the law needs to come to the Parliament, where we have the representation of several parties, and upon that discussion, it will be voted, that new law, and then will take a couple of weeks to be sent to the President of Portugal to see if the law is according to the Constitution of Portugal, and it will take time. So the political system, it's working. It's also something that the people also have a say on every law that goes to the Parliament. So that's something that we would like here to share, that the things that were said will be discussed in the near future. And I would like to finalize by showing here only 3 graphs that show how the Portuguese economy has been doing. Very important to say that we keep a very low unemployment rate. That is very, very important, because that gives the Portuguese economy growth in the coming months, in the coming years, keeping this unemployment rate at these historical levels. And we have been recovering in terms of our public deficits and our public debt. Portugal, just to finalize, Portugal continues to win several prizes around the world: tourism, climate changes, the most secure country to live, etc. So in a nutshell, you are very welcome to be with us, to invest in Portugal, and you have here partners that can help you with that move. So thank you very much for listening, and very happy to answer all your questions that you may have. Thank you.
Well, thank you very much indeed, Nuno. That was most interesting. Thank you for your time. And just to reiterate to all our viewers, Nuno's presentation will be sent to you all by email very shortly after the webinar finishes. And now I'd like to introduce our second speaker, also a chamber member. I'd like to introduce you to our second speaker, Pedro Correia Silva from ActiveCap Capital Partners. Now, Pedro joins us also from Lisbon. Lucky Pedro. Now, Pedro has, as you can see here, over 20 years of experience in asset management, managing investments in Portuguese companies, large and small, listed and unlisted, in various sectors. Just as importantly, actually, Pedro was reminding me the other day that he's worked several years in London as well for F&C Investments and in their Lisbon offices, particularly focusing on investments in Portuguese companies. And just to recap what ActiveCap does, it's a private equity fund management company, invests in Portuguese companies, active minority stakes. As Pedro will be telling you, all the team and the ActiveCap put their own money in the funds as well, which I think is an important consideration. And Pedro and his team have extensive combined experience in fund management, and investment banking. And as we said earlier, Portugal's National Development Bank ranks them #1, which you'll hear more about when he talks a bit about ActiveCap's funds and how they evaluate investments. So Pedro is going to talk us through the reasons why investing in Portuguese SMEs, small and medium-sized companies, offers above average returns. And he's also going to give us some examples of recent companies that ActiveCap have invested in and what sort of rates of returns they're getting. So Pedro, if I may, I'm going to introduce you and ask you to tell us a little bit about ActiveCap.
Yeah, thank you, Christina, and all the team of Portuguese Chamber of Commerce for organizing this event and inviting us to have the opportunity to talk about the investment landscape in Portugal. And as you said, ActiveCap is a private equity fund manager. We are specialized in investing in Portuguese companies and Portuguese companies with a global or European activity and growth potential, which is something that I really want to stress. What I'll be presenting, it will be ActiveCap 2, will be our second fund, a fund that we really consider an attractive investment that combines the macro trends that Nuno just mentioned about it, and also the micro and top opportunities that they are a little bit of structural catch-up with other European economies. At the same time, they are companies, they are outside of the radar of other bigger private equity funds, European established private equity funds. In a nutshell, ActiveCap team, we are investing over 20 years in Portuguese companies and managers. Our track record is quite compelling, meaning that this strategy has proved to be right, and also to give the returns that we are aimed to provide and we are targeting. The way we do it is unlocking the value that the companies have by putting resources, financial resources and human resources on managers. We aim to achieve over 15% target annual return. And as you said rightly, our investor base is mainly institutionals that do provide their confidence in our management and track record. In a nutshell, what is the opportunity altogether? We are basically talk about two layers. One, companies, they need to upscale and compete globally, and this is true all over the world. On the other side, there is a limited capital to fund that growth. Starting with the need to upscale and compete globally. What we notice on these years of investing in Portugal is it is a very fragmented market. Too many companies, but too small companies at some time. And two, when they need to compete globally and they need to grow, and the complexity of the business, of course, increases. And that is why we need to put management on the companies. On the other side, it's the limited capital. It has been a structural thing in Portugal. You know, it comes with the Portuguese financial system, which was mainly bank-driven, and now is becoming more diversified with more companies or specialized banks as somewhere, and also the loans are being replaced with bonds and capital. And that is something that is important to fund properly the growth prospects. I will provide some meaningful data to support this. As you can see on the top chart, the number of SMEs per 1,000 inhabitants is quite high in Portugal. We are on the top 4. So it is really fragmented. But when we look to the other way around, Portugal is among the European countries with the low density of large firms. We are on the bottom side of that, which provides an opportunity to scale up those companies and doing that, what we need is also capital. And with that, and with this information, what we are pointing out is for the last, on this series of 5, but the series is quite longer, for the last 5 years, there has been a gap, annual gap of 500 million each gap to be in line with European average. I would say that if we want to catch up European average, we should invest over the European average to, of course, put us in line to European spending of private equity and capital to GDP. So this is why, putting all these two informations together, this is why we say it's a very compelling story. And there is also a convergence of value in the companies where we do invest, either because they have potential to grow further, either because they can compete globally. But when we compare the Portuguese valuations and the companies, the price, if we can say it this way, the price we pay to invest in a company in Portugal compared to the same type of company with the same sector, with the same size, we are paying much less than the European average. This is true for these two examples that we can show to you. So what we are saying with all this information is that we can benefit not only from the macro trends, structural convergence of the Portuguese growing companies, but we can also benefit from the opportunity, I think we can say almost opportunistic, the timing to invest in companies that they are trading much lower than their peers with the same economic risk. And that is one of the key considerations about our strategy and investing in Portuguese SMEs. Moving further and to talk a little bit more about us. So we do have over 20 years experience investing in Portugal, and also it is quite important to stress that we have been investing in Portugal, but also working outside of Portugal, knowing international financial companies, either also taking our knowledge from European and international and US universities. As Nuno mentioned, we are a very open economy, and we like to know all the other markets to understand better when we come back and we invest in Portugal, what are the dynamics, the global dynamics. This is quite important, the way we see our investment. So better is to give some specific examples of all of this strategy comes to when we do to make some investments. We have 3 examples that somehow shows 3 different types of strategies. The first one is consolidation, meaning that fragmented markets, so consolidation will be merging companies to becoming that bigger. So we did an investment in Firmo. Firmo, it's an office material producer, and with that investment, we bought Staples business in Portugal. Staples is a known business in the US. It's the biggest office material distributor in Portugal. So we did an investment in a company that was doing 12 million euros in COVID times to a company that, as of the end of 2022, it surpassed 100 million revenues. And this comes with a plan, a value creation plan that we are increasing the online sales and the service with higher value added. As we can see, we have a very clear exit strategy on this one. And as of the end of last year, our returns are valued with a target returns in line of our fund, 14% IRR, which is somehow a way to say that of those are the expected returns and the strategy pretends to provide. A different example, but I think quite important as well on our strategy, is to invest in companies that have global potential and very high growth profile. We did a search on a sector that we consider it's a long-term trend, positive trend, which is the sector of the supplements and sports nutrition. After we did that search, we found this company, Zumub. Zumub, we like a lot their products. We like a lot their management. It's very young management, around the 30s, very humble in the way they are really committed to grow the company to becoming a European company. So we did invest in this company. Our value creation plan is to increase their product development and also their facilities. As we can see, before investing, this company was doing 9.4 million. It ended 2022 over 18 million. This is the type of opportunities that we really like. And when we can combine growth prospects, management skills, and we put basically more resources to expand or to capitalize their growth. Our exit strategy here will be to becoming our exit on a European private equity fund, which we know many deals have been made with a very higher multiples than the ones we bought. And we are valuing this company as at the end of 2022, and again, a little bit over our target returns. The last company that I want to talk about is Next. Another strategy that we pursue is to find companies that they work in a very niche market, but with very value-added products and brand recognition. It's quite important to have these brand recognitions because then you are less price sensitive. This company is a producer of helmets for motorcycle industry. It's over 95% of their sales is to European and global markets. So their sales imported are residual. And that is again important to stress that we are investing in Portuguese companies, but with a global footprint. And our value creation plan is really to expand their technological skills. Every helmet that is being designed and produced, it's a huge investment to make sure that it complies with all the norms, European norms. And as we can see here, it's a company that the biggest sales countries where they got the country they got the biggest sales is Germany, which some also says that about the quality or the perception of quality of these products. And to move forward, and so what type of companies are we investing? Portuguese headquartered, export-oriented, business model and size already established, assuring that it's a company that already proven to be cash flow positive and can become potential market leaders on their own niche. That's why we like to invest and reinvest in R&D and innovation. With that, we aim to get annual returns over 15%, and those returns comes mainly from increasing revenues and increasing operating profits. So, how many companies, how is the pipeline of the investments that we have so far? With this information, we want to share that it's quite a lot and diversified in terms of sectors and sizes. And we track this evolution because it's important to say that when companies understand they can be better off being capitalized and being having a partner like ourselves in their management, it really helps them to grow further and more sustainable. So altogether, our second fund follows the same strategy of our first fund, the examples that I have provided to you, and also that we are a little bit now increasing the ticket size from 5 to 8 million each investment that we do. As of today, and Christina already mentioned, we have an anchor investor, which is the Portuguese Development Bank, Portuguese Fomento, which provided us already an investment ticket of 47 million. And we also, again, it's quite important to stress, we do believe in this investment strategy. We put our money on this fund because we really think that's the best way to align interests about who is managing and also all the other investors that are also believing on this strategy. And also, we also have another private equity funds of a big Portuguese institution that is providing the remaining, and we are open still to receive more investments, of course. So to wrap up, our investment strategy has these differentiation considerations to capitalize small and mid-sized companies with sustainable business models. Companies that they have growth potential or consolidation potential. We do the value creation by active management, what we call in our industry an hands-on approach. We align investments, we align interests with investments. It's our own money is invested in the fund, and it is being a fund that has been somehow scrutinized by the market by having reference institutional investor base in our investors base, as I said. So with that, I'm happy to answer now questions, Christina, and pass back to you.
Wonderful.
And thank you again for that.
Well, thank you very much indeed, Pedro, for that. And I know earlier we were talking about how a fund like yours does build long-term relationships with investors. There's no question about it, because it's a 5 to 8 year journey. Now we're going to take questions from the audience. So if I may have the next slide with the contact details. And we have received several questions from our audience during the webinar. And some very good questions from our visitors before the webinar as well. So if you do have any questions, please add them to the Q&A box or the chat box, and we will take them now. If there's any questions we don't have time to answer, please feel free to schedule a phone call or an email chat with Nuno or Pedro. Their contact details are here on the screen, and I know they're delighted to talk to you at any time, so feel free. And I've got my first question now, actually, for Pedro from ActiveCap. Pedro, tell us something. What new investment, sorry, forgive me. What are the opportunities for environmentally friendly investments in Portugal? This is a very big theme in investing right now. So, Pedro, I wondered what ActiveCap is thinking about environmentally friendly investments in Portugal now.
Yeah, thank you, Christina. Quite an interesting question, and very opportune in the sense that we actually, our strategy, investment strategy, and as you mentioned, and we have been doing investing for many years, and at FNC Investments at the time, we had at the time one of the biggest teams in London, over 20 analysts that they were doing already ESG analysis. And we launched at the time the first Climate Opportunities Fund. This was back to 2007. So in our mind, ESG concerns are within our investment strategy. So what we do, we try to improve the profile of the companies where we do invest, and we are not doing what is called negative screening. What we do is we like the company, we like the managers, we like the prospects. What we try to make sure is after we invest in those companies, there are key concerns that need to be achieved. So we engage with the companies, and the name is engaging with promoters, setting targets to becoming more environmentally friendly, reduce waste, making sure that we are more efficient, energy-wise as well. And at the end of the day, putting a business more sustainable, it benefits all of us. It will benefit environment, it will benefit social, but also it will benefit financially our investors. That's the way we think about it.
Okay, that's very interesting. And the other side of the coin from that, Pedro, is the question of the risk in investing in Portugal right now. What do you think the risks are for investing in Portugal, and how do you mitigate those in the fund?
Yeah, indeed. Well, Christina, risks comes along with investments. There is no such thing, no risks and returns. But with the way we see it, and despite being a small country, as you said, there is a perception of risk which is higher than investing elsewhere, which, to be fair, we do not follow completely in the way that the opportunity and the potential to grow, it's really more compelling than the risk that comes along. Please remember that we are investing in Portuguese domiciled companies, but with activity and exposure to European markets and global markets. So economic-wise, the risk, in our view, is the same by investing in a company in a specific sector with the same site, investing in Portugal, Spain, and France, if they are competing globally and they have exactly the same economic risk. On the other side, and now mentioned to Nuno comments, we notice that political-wise and security-wise, Portuguese is becoming quite safe and country, and we do not have huge political risks in Portugal, which provide us the net to invest confidentially. So meaning that the workers here in Portugal and all the social affairs are quite stable. So this is the first approach. The second approach to mitigate risk is, and in any investments that we should do, is to follow the investments. So, and that this is why we mentioned before that we have an active approach, an hands-on approach. In every investments that we do, there is management that we nominated, and they are there to make sure that the capital that we put on those companies are properly managed and properly followed through, and when needed, they do the changes to make sure that the project it goes as expected.
Okay, so there are several safeguards in your system. Yes. Now, thinking about the practicalities of investing in your fund, I've got a question, or any Portuguese private equity fund, because there are several out there. I've got a question for Nuno at Bison. Nuno, one of our readers or listeners or viewers, I should say, is asking, what are the Portuguese banking requirements with regard to inward transfer of funds from overseas? If an individual or an investor is thinking of putting money into one of these funds, how does it work in practice?
Well, thank you very much for your question. The question it's very important because how do we make this happen? So we try to keep it simple. To invest in a fund like ActiveCap, we need to have a bank account in Portugal. A bank account in Portugal, we can open a bank account today remotely, so no one needs to come to Portugal, although you are very welcome to come to Portugal, but there is not a need to come to Portugal to open a bank account. We can do that remotely. Of course, you will need to have the Portuguese tax number, but also that can be taken care or either remotely or with one of our partners, law firms that we work with. And it's very simple. It's a process that is very simple. You just need to fill some forms, send it over the originals to us. We will open the account and send you the IBAN, which is your account number, international account number, that you will use at your bank to do the transfer. And then when the funds are here in your account with us, it's quite simple, because to do an investment in the private equity fund like ActiveCap fund, we just need to fill, well, we always need to do the due diligence and the KYC. Of course, that's a global trend. That's something that we always need to do everywhere. But after that, it just needs to complete a form, send it over by email, and we will do the investment and receive the fund in the account of the client. So okay. A very simple process, very straightforward. I would say that depending of the rush that the client has between 2 to 4 weeks, all the process can be completed. So it's quite simple.
Okay. And Nuno, I've just been reading another question coming in from our audience, and this is obviously a very important question too. Admittedly, it's driven by the central bank, the European Central Bank. But when do you think, or what do you think the upper limit of interest rates will be? When and what do you think the expected impact on the Portuguese economy might be in 2023?
Well, that's a very good question. So like I was saying when the presentation, we expect that we are reaching the peak of inflation during this first half of the year. Of course, that European Central Bank is yet going to raise rates again 1 or 2 times. So we think that this increase in rates will stabilize in summertime, and then by the end of the year, beginning of next year, we will see the rates coming down. Okay. The impact for the Portuguese economies, we do not foresee a huge impact. The Portuguese economy, it's a very open economy, very well diversified, and as long as we keep the unemployment at a very low rate, and we keep all this trend around tourism, like I said, that represents almost 20% of our GDP, we will do just fine. Okay. All right. Now, another important question, which one of our viewers asked us in advance, actually, of the webinar, and this will be probably our last couple of questions because I want to keep to time, but I'm conscious that all of our viewers are still with us, so we're obviously saying something interesting. I've got a question for Pedro at ActiveCap. How tax efficient, Pedro, are these funds, and why should people consider them?
Yeah, Christina, actually, tax is always something that we complain, but when we look to investing in Portuguese private equity funds, call it Fundos de Capital de Risco in Portugal, they have one of the best tax profiles. And we give you specific examples. A Portuguese residence, it's only taxed 10% of the capital gains when they do invest in Portuguese funds that invests in private equity. Why is that? Because there is a government understanding, and they provide this fiscal benefit because there is an important relevance of investing in Portuguese SMEs and putting them bigger. For international investors, actually, there is a zero withhold tax by doing that. So it all comes to where they are domiciled, which of course I cannot mention. But again, private equity funds in Portugal, by far, the most attractive instruments to invest on that regard. Okay. And there are several types of visas available for foreigners that wish to come and live or invest in Portugal. Obviously, ActiveCap is not a specialist in visas, although you work with several companies who are. Could you very briefly summarize a couple of the different visas that you might talk to investors about? Obviously, you're not an expert, but just so they have a view of the range of visas. Yeah, there are, of course, advisors that they do provide their advice very professionally, but for our knowledge, and for the specific fund that we manage, there are 3 considerations that need to be met to be eligible to get that visa for investment with investment purpose. One of them is to invest over 60% in Portuguese SMEs. As we mentioned, we invest 100% of the fund in Portuguese domicile SMEs. The second one is to have a maturity over 5 years. Private equity funds should have maturities over that on average, and ours has a maturity of 8 years, which also complies with that. And with that in mind, so For those investors, they were looking to invest and to get that. This is actually an interesting opportunity in the sense it is fully eligible and at the same time provides interesting returns for the maturity of their investment. So it's if they need to hold an investment for over 5 years, it is important that returns that comes from that holding period are in line with the returns that we are provided. Is not the same as compared with a different type of shorter term investments. So our returns are in line with expected returns of long-term investments, like those that are needed for this type of visa investments.
Okay. Well, I have to say, ladies and gentlemen, we've run out of time. We were going to, well, we spent 30 minutes doing the presentations and I was expecting only 5 minutes of questions, but we have now reached 15 minutes of questions. So I'm afraid, ladies and gentlemen, we are going to have to finish the webinar here. But I think some very interesting questions from the audience. Thank you so much. May I reiterate that the presentations from both Nuno and Pedro will be sent to you very shortly. If you'd like to talk to Pedro or Nuno, please contact them. Their contact details are on screen. But in the meantime, I'd like to thank our speakers, Pedro Correia Silva from ActiveCap and Nuno da Rocha Correia from Bison Bank, very much for taking the time to be present with us today. Thank you to our audience for being so interested and sending us information and questions. And please join us on our next webinar. You will be given an advance notice. We look forward to seeing you. Thank you so much.
Thank you. Muito obrigado.
Muito obrigada.